Right then, no faffing about. You're locked into the Big Short Club. I'm Chris.
And I'm Morgan.
And if you're here, it means you're tired of getting rinsed by the market. So let's get into some proper alpha. Today we're talking open interest. And before you switch off thinking it's some, dusty textbook rubbish, listen up. In the crypto perp markets, this is the only vibe check that matters.
Right?
It's the difference between spotting a real move and getting caught in a nasty trap.
Couldn't have said it better. Look, everyone's obsessed with volume, right? But volume is just the noise level in the club. It can be loud, it can be quiet.
Yeah.
But it doesn't tell you if people are actually coming in or leaving.
Exactly. Open interest is the bouncer's head count. It's the total number of people inside the club at any given moment. Are more people coming in, hyped for the night?
Okay.
Or are they cashing out and calling a taxi home? That's what we need to know.
Let's break it down dead simple. If you decide to go long on an oil future, and I take the other side and go short,
Right?
we've just created a new contract out of thin air. The club's head count, the open interest, goes up by 1. New money, new people have just entered the party.
And if we both get bored and close our trades, that contract vanishes. Open interest goes down by 1. We've left the club. But, and this is the key bit, if I find some other geezer to take over my long position, the head count doesn't change. The bet is still live, just with a different person.
That's the entire game. Volume can be massive on a day when everyone is just closing out old bets.
Yeah.
It looks exciting, but the party is actually ending. OI gives you the real picture. It's all about the conviction. Is fresh money backing the move?
All right, let's get into the source. The 4 scenarios. This is the bit you need to screenshot for your trading Bible. Morgs, you start. What happens when price is pumping and open interest is climbing with it?
That, my friend, is the dream scenario for a bull. It's a healthy, proper trend. It means as the price climbs, fresh waves of buyers are coming in, opening new longs, and saying, I want in. The move has legs because new money is fueling it.
Yeah.
It's not a fake out, it's the real deal.
Green lights all the way. Now, let me take the flip side. Price is dumping hard, but open interest is rising. What's the read?
That's a 5-alarm fire for the bulls. It means as the price is falling, new money is flooding in to short the market.
Wow.
The bears are smelling blood and they're piling on with conviction. You do not want to be the hero trying to long that. The smart money is betting on it going lower and they're putting their cash behind it.
You're just going to get run over. Now for the juicy part, the market traps. Morgan, what about when the price chart shows a massive green candle, a big pump, but open interest is actually falling? The suckers rally, the classic short squeeze. This is the market's oldest trick. It looks incredibly bullish, but OI is telling you that money is leaving the market. The price is only ripping up because panicked short sellers are being forced to buy back their positions to close them.
They're getting liquidated. It's not new bulls with fresh cash.
Nope.
It's terrified bears running for the fire exit. And once they're all out, who's left to buy?
No one.
Right. The buying pressure vanishes and the price almost always collapses right after. If you FOMO long that move, you're the exit liquidity.
You're the last one to arrive at a party that's already over. Now, here's a question we'd like you to think about.
And the final scenario is the mirror image. Price is drifting down, but open interest is also drifting down with it.
That's long liquidation. The price is falling simply because weak-handed longs who bought higher are finally giving up and closing their positions. They're panic selling. But here's the twist. It can actually be a bullish signal.
Exactly. It's a sign the downtrend is getting exhausted. The market is just having a clear out of the weak players.
Okay. Once all those nervous sellers are gone, the downward pressure eases up. That's when you can start hunting for a market bottom. It tells you the panic is nearly over.
It's a game changer when you put it all together. Price and volume tell you what is happening.
Yeah.
Open interest tells you the why. It tells you who's in control, confident you money or old panicked money.
It's context. In the stock and forex world, we combine this with the commitments of traders report to see exactly what the big institutions are doing.
Right.
As the price is still high, OI gives you the early warning.
100%. In crypto, it's even faster. You pair OI with funding rates. If Bitcoin is pumping but OI is flat and the funding rate is negative,
Yeah.
you know it's a complete fake out. It's just someone on Coinbase buying spot and squeezing the derivatives market. No new money is coming in to sustain the rally. You stay away or you short it. See? The principles are universal. It doesn't matter if it's soybeans, the euro, or some coin with a frog on it. The flow of money and the psychology of the crowd is the same. This is proper CMT level 2 analysis that puts you miles ahead of anyone just staring at a price chart.
For real.
So the main takeaway is this: stop trading blind. Pull up the open interest data. Is the headcount at the party going up or down? That will save you from more traps than any other indicator. Stop chasing price, start analyzing conviction. Well said, old man. All right, that's a wrap. We're dropping alpha like this all the time in our private chat group. The link's down below. Hop in and have a laugh with us. Don't be a stranger. Now, here's a question we'd like you to think about. The next time you see a massive price spike, before you even think about hitting buy, ask yourself, is this the start of the party, or is it just the sound of people getting kicked out? Stay sharp. We'll see you in the chat.